Hello everyone. Now today the CAMS IPO is opening and the question on everyone's mind is, should we invest? Because obviously it is priced at a fairly steep level. So the investors are really confused as to whether to invest in this IPO or not. Well, before we come to any conclusion whether to invest or not, let's have a look at the brief particulars of the IPO. See, the issue size is rupees 2,242 crores, with the nature of issue being an offer for sale where the shares are being offloaded by one of the current investors, that is the National Stock Exchange Investment Limited, NSE Investment Limited. The number of shares being offered are 1.82 crore shares. The face value of shares is rupees 10 and the IPO is being priced with a price band of rupees 1,229 to 1,230 per share with a minimum bid quantity of 12. The number of shares being offloaded, that is being offered, are 1.82 crore shares, and it's quite interesting to note that the amount which has already been raised from anchor investor is rupees 667 crores. Let's look at who are the current shareholders. Well, the current shareholders are quite an impressive lot. NSE Investment Limited, Faring Capital, which is an Indian private equity firm, HDFC Group, and of course the well-known Warburg Pincus Group, which is a global private equity firm. Now, what are the reasons to invest in this company? See, it's got an experienced management team. The company was incorporated in 1988, which means it's got a solid 32 years experience to back it up. It's of course a market leader in the segment in which it operates with a 70% market share. Now that's a considerable market share. And for those who are financially inclined, they would be very interested to know that it's a zero debt company with a high return ratio. And because of its presence in the market for over 3 decades, it's got pretty strong relationship with AMCs. I mean, check this out. It serves 4 out of the 5 top AMCs in the country. Now that's something to boast about. Now let's look at the pricing rationale and see whether the pricing is justified or not. See, at rupees 1,230 per share, it is priced at 35x of FY20 EPS. But at the same time, you also need to keep in mind that it's priced at 10 to 15% discount to the listed AMCs, exchange and depositories or similar other entities which are traded. Now, when we say similar other entities, you need to keep in mind that the company really has got no other peers which are listed and traded. You can only look at companies which are engaged in one or more of the activities that the company is engaged in. I'll come to that in a moment. The return on equity is at a very healthy 35% with a dividend payout history ranging from 40 to 65%. Now, that's quite a healthy dividend payout history if you ask me. See, at 35 times FY20 EPS, the issue seems to be fully priced. But then you've got to keep in mind that this is a very asset-light business and asset-light businesses tend to be valued a little differently. Plus, also we've got to consider the fact that it's a market leader in the segment in which it operates with a pan-India presence and good financial and with a good pedigree. So one obviously will attach some kind of premium to these factors. Now, if we look at the financials a little more deeply, we would see that during the period FY17 to 20, the revenue has grown at a CAGR of 14% with an EBITDA growth of 13% and a net profit growth of 12% during the same period, that is FY17 to 20. Plus, and I would like to reiterate this again, it's a zero debt company and this in turn translates into a very healthy return on equity of about 35%. And like I said, there are no listed peers. Now you've got one company which is CDSL, which performs one of the functions of this company. And if you look at CDSL is trading at a PE multiple of 40.5 times, whereas CAMS is offering its shares currently at a price which is a multiple of 35 times. So if you look at this, it seems to be reasonably priced, but at the same time, let me reiterate that at the price of 1229 to 1330, the issue seems to be fully priced. But looking at the way the other issues and the IPOs have fared, I would like to think that this issue would also provide smart gains to investors on listing. And investors who would want to hold these shares for a longer term period would definitely be rewarded with good returns. So my thought process on this IPO would be to definitely go for it, because there seems to be a little downside risk. If you are very apprehensive about the company, then I would suggest that you may dispose it off immediately on listing when you could get smart returns. And if you are comfortable with this company, which I definitely am, you may hold the shares for a longer period to earn higher returns. That's all for today. Stay fit, stay healthy, and ciao.